Hey folks, Dan Frio here, the rate update. Today is January 14th, 2021. And today we had news coming out of the Fed, which I'm going to go over that in a second. Stock market isn't doing too well, but there's some big announcements coming out later this evening that we're going to talk about next. So don't go away. So hopefully you're watching my morning videos, kind of giving you an idea what's going on with the markets pre or before the day happens, and then I'll recap it at the end of the day, and then we'll go from there. But what I talked about today was the Federal Reserve was coming out and talking, and then President-elect Biden's coming out. Actually, my apologies, he's coming out this evening and going to lay out some details. We got some of the information, and looks like I was right there so far, and looks like I was right on the Federal Reserve, what they were going to come up with. So let's see what's happening in the news and then what's happening with the markets. So Fed maintains aggressive asset purchasing until substantial further progress on recovery. That's keywords, substantial, not just, some progress. They want substantial. So they're buying 120 billion with a B, $120 billion worth of mortgage-backed securities and treasuries on a monthly basis to stabilize the bond markets, okay? So that's part of what I was saying that the Fed's going to come out and announce and try to put an ease to the markets. The concern there was, and you're going to see in a second, I thought that was going to be good news on Wall Street, but the Dow's down. So many times what you see is people trading on the rumor and selling on the news. Meaning when it's talked about, they're already anticipating it, so they jump into their positions, and then once it does take place or gets inked, it's already baked into the cookies. So then people start to sell. That's what we might have seen today, and I'll do some more analysis to figure out that portion of it. So the rest of the bubble is this. Federal Powell says U.S. economy may return to, that's great news right here. So I'm still concerned on why the Dow is down, okay? And I'll dig into that further. The next thing is, here's that part of the stimulus bill that I said that I'm expecting. I'm expecting that bill to come out, and that the 900 billion is going to turn into 2 to 3 trillion, and some of this is already coming true. You can see right here saying Reuters is reporting that there'll be $1,400 additional payments to that stimulus package. And you can see Senator Majority Leader Chuck Schumer promised a $2,000 figure, and so they're gonna deem that $600 that they already are paid out or already compensated into the agreement that's already there, the stimulus package, is they're gonna quote, and you'll start seeing these words, that was just a down payment. They're going to start boosting the stimulus package even more and more sweeter to not only individuals but to companies, states, and municipalities. So that's that part of the equation. Now on to why you come to the channel. Mortgage-backed securities getting crushed again today. So we locked in, believe it or not, we locked in a good amount of people late last night. And we had a rally in the market. I'm going to show you that here next. So why do we focus on this for the newbies? Well, the main reason is this number here represents what's happening to the price, not the yields, but the price of what the mortgage-backed securities. What is a mortgage-backed security? It actually is a bond that trades on Wall Street that is the single component or major component of mortgage rates, believe it or not. So I expected, I had concerns when we kept topping off here, and then we had a reversal to the downside. This is a big move. You gotta look at, we went from 104 to 102 point, whatever this is, 102 point, is probably 2.5. That's a substantial reversal. And then we had a comeback yesterday, and you can see here, I'm looking at down in this portion here. Let me scooch it up in case it's off the screen. And then we had things stabilize here. The good thing is we had our bottom is like the low of the day. So in this red little barcode right here, the red is higher than the bottom of this green bar here. So that means we had a higher low. Okay, so I'm not going to teach you charting 101 on all this, but I'll just give you some basic points. The top line here is this line here, and these major lines through here are called Fibonacci resistance levels. Okay, normally in a market when you're charting, this will create a temporary ceiling, and then these lines through here are floors or temporary floors that normally there'll be resistance when you're trading stocks, bonds, whatever. So that's for example, if this was a stock and it started going down, you're thinking, okay, it's going to hit this resistance level, then it should kind of halt. It should stop. If you break that, then the next halt point is down here. If you break that, then the next stumbling block is here, and so forth. So you can see that we busted through a whole bunch of these charts or a whole bunch of these Fibonacci levels in the past week, and then we had a reversal. Today, there's a lot of focus right now on, I hate to say, on Washington. So in everything that we're learning right now is, it doesn't matter what the economy's kind of doing, and it does, but it's the stimulus. To stimulus or to stimuli or not to stimuli. There's going to be a stimulus. How juicy is that going to be? It's yet to see. I'm predicting here a $2 to $3 trillion package that the $900 billion is going to get tweaked, and it's going to get tweaked major league. That's my prediction. I could be wrong, but some of the news that I came out with already is I said that stimulus check to everybody is going to go from 600. It's going to go up from there. We're already seeing that it's breaking right now. That it's probably going to be moving to 2,000. You can't give $1,400 to everybody, basically throughout the country almost, and stay at the 900 billion. So that thing's probably going to double or triple. Good short term for everything, everybody, and the markets. It's bad long term for the economy. So I'll leave it at that. So the next thing is, where should we be trading? Well, technically, we should be trading right in this range right here, okay? And that's basically the Fed is saying the 120 billion that they're buying each month in mortgage-backed securities and treasuries should be able to create an equilibrium here and allow us to stabilize this market. The tough thing there is what this new stimulus package is going to look like, because if it's as aggressive as I think it's going to be, it's going to throw off a lot of my predictions. So that's being that. So where we should be trending is probably rates about a quarter lower than where we are right now. Are we going to get there? I don't know. And that's why I locked a good amount of people today. All right, so let's see what the intraday chart did. So we started out of the gate pretty good, like I was anticipating. And then all of a sudden, midday, I don't think people liked. I'll really dig down into what the Fed said. They basically said, we're going to stay aggressive or whatever. I think the markets were looking for something a little more with teeth in it to say, give more specifics. And since they didn't, we had this drop in the mortgage-backed security prices. Okay, so that's my assumption there. The economic calendar, this news couldn't come in any worse. Producer prices index, well, that's bad. There's really no inflation in the system that a lot of people are worrying about. Initial job claims, we had almost 200,000 more than was expected. That's not good. Continuing jobless claims, 200,000 more. That's not good on the jobs front. And then import prices were up 0.3. That's a little hot. Can't figure that out really, but I think what's happening is the products that people are buying, the prices are going up on those things. So that's what's causing the import prices to go up. in the month over month, year over year, we're actually okay. Okay, so that's the year over year figure and month over month. So I'm not going to really worry too much month over month. That'll probably get revised as well. Tomorrow there's more economic news coming out with with inflation. I can't fathom how there could be overheated indexes that's saying we are overinflated in pricing, or prices are heating up. I just can't, I don't see that coming around the corner. So now on to daily rates. What's going on with rates today? Well, we saw a downtick of 3 basis points on the 30-year conforming, down 2 basis points on the 30-year jumbo, down 3 basis points on the 30-year FHA, and down 4 basis points on 30-year VAs. This is an average on where we are with rates. So 3 basis points is, guys, 0.03. Okay, so it's really, I'll say, irrelative, but I'd rather them go down 0.03 than up 0.03. Since last week at this time, we are up 7 basis points. Again, not big, but I'd rather see a negative here. That means rates are coming down. But if you look at where we were a year ago, we're down almost, 100 basis points is 1%. 99, so we're almost about 1% lower right now than where we were a year ago today. So that is the good news. So that's where we are with the market. That's what I'm expecting. Again, tonight when Biden lays out his stimulus package, we'll learn a lot more, and it should move the markets tomorrow in a good direction, because he's gonna come out there and paint a rosy picture that they're gonna throw all this money out there and fix everything. And I hope it happens. So I hope you like the video. If you do, don't forget to give me a thumbs up. Subscribe down below. Smack the bell so every time I do a video, you get an alert. But you're like, Dan, how do we get a hold of you? And what do we need to do if we want to reach out to you guys and get your help? So here's where we can help you. If you're looking for a mortgage, if you're buying, building, refinancing, just have questions, call. If you're in the process with another company right now, send us their paperwork. Let's see what they're doing. Rates are going like this. Maybe they locked you up here and rates have come down to here and we can get you a better rate, lower fees, and the whole ball of wax. Even a 0.25% lower in rates can save you hundreds and thousands of dollars over the term of the loan. In most cases, we're cutting people's costs at least a couple $1,000 just out of the gate. So get a second opinion. That's all I got to ask from you. So how do you do that? Well, go to our website, which is therateupdate.com. I got to type it in here first. Therateupdate.com. When you get there, scroll down to the bottom, and here's our 800 number. It's 844-775-LOAN. That's 844-775-5626. Or email me your current quote from the other lender to get a second opinion, or email me your mortgage statement. Let's see where you are. I'll do a free mortgage analysis for you to let's see the numbers. Does it make sense to refinance it or not? And I will be honest with you. I'll say, yes, it does, or no, it doesn't. You can email me at Frio at preferredrate.com. So dfrio at preferredrate.com. If you're in the process of buying a home and you want pre-approved, click the home purchase qualifier right here. It's a little funnel that you'll answer some questions. Those questions will get sent to us so we can help analyze which mortgage is perfect for you. Same thing over here in the green section, but this is for refinancing. Up here, if you're like, Dan, I just want to apply now. I'd like what you guys are doing. I trust you. I want to move forward with this. Hit the apply now button and get the ball rolling. You can do the same thing here with a free quote. Click this, and probably within 15 or 20 minutes, myself or one of my mortgage advisors will call you and answer any questions you got. I just launched this about a month ago. This is a free home valuation system. It is phenomenal. It's free for you guys to use. Usually it's a paid service. I pick up that bill. I do not sell your data. I'll just give this as a perk to my viewers so you can check out the value of your home and all kind of information about your home. Believe it or not, I even say, you took out a mortgage at this time, at this loan amount. Many times it even has your rate in there because it pulls a bunch of data in the background on that property, not specifically you, but on that property. and it'll pull up a bunch of data there, and then you'll get monthly newsletters on what's going on with the value of your home and other things. So that is it for today. Tomorrow should be a pretty big day. After we hear from Biden tonight, President-elect Biden tonight, we'll have some more clarity on what's coming up with the stimulus package. So God bless. See you tomorrow. Bye-bye.